We've been looking at some expert discussion on all this, and, the goal for this deep dive is really to cut through the noise, to pull out the most important bits about what these tariffs are, how they're hitting the global economy, and what the knock-on effects might be, trying to see it from different angles, too.
Okay, so let's start right there.
Yeah.
What exactly are these recent tariff announcements? What happened?
So the key date was April 2nd, 2025. The previous administration actually called it Liberation Day.
Liberation Day, right.
And this wasn't minor tweaking, it was broad. A new 10% tariff slapped on most goods coming into the U.S.
That 10% alone is pretty significant, affecting almost everyone. But the real fireworks, the main disruption, seems focused squarely on China.
Precisely. On top of that general 10%, you've got these much, much higher tariffs aimed specifically at Chinese products. And we're talking increases that can fundamentally change the economics of importing those goods.
Yeah, just to give you a sense of the scale, I mean, the effective rate on certain things coming from China, I think electric vehicles, even basic stuff like syringes, it's climbed as high as 245%.
Wow, 245%. That's not just making things pricier, that's potentially prohibitive.
Exactly, it's a massive hike.
And it's important, as the analysis points out, that figure, that 245%, it's not one single new tax, right?
No, that's crucial. It's cumulative. It's the result of layering different tariffs over time.
So what's the rationale from the U.S. side? Why these specific heavy tariffs on China?
Well, the stated concerns revolve around China's trade practices. Things we've heard about for a while: government subsidies, fears of Chinese companies flooding the market with artificially cheap goods.
Like with electric vehicles, for example.
Exactly. The argument is that heavy Chinese government support for, say, their EV makers allows them to sell cars maybe cheaper than U.S. companies can manage, even before tariffs. So the tariffs are framed as trying to level the playing field, protect domestic industries, maybe encourage them to grow, and tackle that persistent trade imbalance.
Okay, so the tariffs are in place. What are we seeing in terms of the wider fallout beyond just the U.S. and China?
We're already seeing the effects, and yeah, the global picture isn't looking particularly great because of it. The IMF, for instance.
Right, the International Monetary Fund.
They've actually lowered their global growth forecast for 2025 down to 2.8%. And they specifically pointed to these tariffs as a major factor.
2.8%. That feels like a significant hit to global expectations.
It is. It shows these aren't just bilateral issues. They're dragging down the whole global economy.
And what about the U.S. itself? What's the forecast there?
Also feeling the pinch. Projected growth for 2025 is now down around 1.8%. That's a noticeable slowdown.
Okay. And China?
China's forecast is also down, now looking at around 4% growth. So yeah, major economies are seeing downward revisions.
So it's definitely not contained. It sounds like this ripples out everywhere.
Absolutely. Tariffs this broad inevitably affect almost every country involved in global trade. And those global supply chains, well, they were already stressed, weren't they?
Still recovering from recent years.
Exactly. This just adds another layer of complexity, more disruption.
Are there specific industries feeling the heat more than others?
Definitely. The semiconductor industry is particularly vulnerable right now. It stands out.
Why semiconductors specifically?
Well, think about the geopolitics, especially around Taiwan, which is absolutely critical for high-end chip manufacturing. Any instability there, fueled perhaps by wider trade tensions, it poses a huge risk to the global supply.
It really highlights the fragility, doesn't it?
It does. And how interconnected everything is.
And this is where things could get really rocky for some big names in tech, I imagine.
For sure. You look at companies like NVIDIA or TSMC, Taiwan Semiconductor Manufacturing Company.
Yeah, huge player.
They're so central. If chip production gets seriously disrupted by geopolitical issues linked to these trade wars, you could see their stock values take a major hit. It shows how these trade actions can have these sort of unforeseen ripple effects far beyond the goods directly tariffed.
Okay, so the U.S. acts. How did China respond, and what about other countries caught in the middle?
China's response was, well, pretty direct and quite forceful. They hiked their own tariffs on U.S. goods up to 125%.
125%. That's a serious retaliation.
It is. It signals they're not backing down easily.
But it wasn't just about matching tariffs, was it? China seems to have other levers they can pull.
That's right. They've also played a more strategic card, introducing new export controls on critical minerals. We're talking about certain rare earth metals here.
Rare earths, stuff like neodymium, dysprosium.
Yeah.
Materials vital for magnets in EVs and wind turbines.
Exactly those. Crucial for a lot of modern tech, especially clean energy tech.
So this isn't just about finished goods anymore, it's about controlling the raw ingredients. What's the potential impact of China tightening the tap on those minerals?
It's significant, especially for the global green transition. So many renewable energy technologies depend heavily on these specific minerals. By controlling their export, China could potentially, influence the pace, maybe even the direction of that transition elsewhere. Gives them considerable leverage.
And this isn't just a U.S.-China story, is it? Other countries are feeling the squeeze.
No, definitely not. The impacts are spreading. You look at Mexico, for example. They export a lot of auto parts to the U.S., right? But if those parts rely on Chinese inputs that now face tariffs, Mexico's costs go up, potentially hurting their competitiveness. We're hearing South Africa is also expecting slower growth because of these broader trade disruptions. That's a global knock-on effect.
Yeah. It sounds like the U.S. might be rethinking its own long-term strategy here, too, especially regarding minerals.
Yes, definitely. There's a clear push now in the U.S. to develop its own domestic sources, mining, processing for these critical minerals. It's about reducing that reliance on China, and it could signal, a bigger shift, a reshaping of global supply chains over the long run.
Okay, let's shift focus a bit now and look at India. They seem to be in a really interesting, maybe pivotal spot in all this.
India's position is fascinating right now. Yes, pivotal is a good word. These U.S.-China tensions, they create this mix of real opportunities, but also some pretty significant challenges for India.
Let's tackle the opportunities first. What doors are opening up for India because of this friction?
Well, the main one is sourcing diversification. You have American companies and others too looking at the high tariffs on Chinese goods and thinking, okay, where else can we make this stuff?
And India comes into the picture.
Exactly. India has this huge labor force, relatively low costs, and its manufacturing capabilities have been growing. So it looks like a viable alternative for companies wanting to move some production out of China.
Is this just theoretical, or are we seeing actual evidence of this shift happening?
No, we're seeing some concrete signs. For instance, Indian private sector business activity actually hit an 8-month high back in April 2025.
Okay.
And the interesting part is why. It was largely driven by a big jump in new export orders, specifically for manufactured goods. That strongly suggests companies are starting to place more orders with India.
Was there anything specific that triggered that recent surge?
It seems a temporary 90-day delay on some of the U.S. tariffs played a role.
Ah, a window of opportunity.
Precisely. It likely encouraged companies to quickly place orders with Indian suppliers, maybe trying to lock in production before those tariffs potentially snap back into place. It shows how sensitive trade flows can be to even temporary policy shifts.
So, which Indian sectors look best positioned to really gain from this?
Well, textiles is often mentioned, pharmaceuticals too. India's already strong there, and IT services, of course. But there's also potential in agriculture.
Agriculture? How so?
If China reduces its buying of U.S. farm products as part of the trade dispute, well, that creates an opening for other suppliers, potentially including India, to step in and increase their agricultural exports.
Okay, so clear potential upsides. But you mentioned challenges too. What are the main roadblocks for India in seizing these opportunities?
Yeah, the challenges are pretty significant and frankly quite familiar. Infrastructure is a big one.
Roads, ports, power.
All of the above.
Right.
Still limitations there. Then there's bureaucracy, red tape, skilled labor shortages in certain areas. Supply chains can still be quite tangled and inefficient within India. These aren't new issues, but they become much more critical when you're trying to rapidly scale up to absorb demand shifting from China.
And are these hurdles actually dampening the economic outlook despite the opportunities?
It seems so. India's own finance secretary, Ajay Seth, estimated that these recent U.S. tariffs could actually shave somewhere between 0.2 and 0.5 percentage points off India's GDP growth.
Wow. So even with the potential gains, the overall trade war itself still creates a drag.
Exactly. It highlights the tricky balancing act. There are opportunities, yes, but the global headwinds are real and can offset some of those gains.
Looking down the road then, what's the outlook for U.S.-China relations? Are we stuck in this pattern, or is there a path to de-escalation?
It's very fluid, very uncertain. Right now, both sides seem pretty dug in. The U.S. position seems to be that lowering tariffs depends on China changing its ways, its trade practices.
Which is a major sticking point.
A huge sticking point. So an easy resolution doesn't look likely in the immediate future. It's a complex geopolitical standoff.
And you mentioned earlier there are other factors at play, even within the U.S.
Yes, that's another wrinkle. There are legal challenges inside the U.S. court system against these tariffs. How those play out could add another layer of uncertainty, potentially changing the tariff landscape irrespective of direct U.S.-China talks.
So zooming out again globally, what kind of solutions could help calm things down? What might lead to more stability?
Well, on a big picture level, people talk about strengthening multilateral bodies like the World Trade Organization. Maybe reforming the rules to better handle these kinds of disputes.
Trying to get back to a more rules-based system.
Sort of, yeah. And then for individual countries, the strategy seems to be diversification. Don't rely too heavily on any single trade partner. And invest domestically. Build up your own industries to be less vulnerable to these external shocks. Build resilience.
So wrapping this up for you, the listener, what we've seen is that these U.S.-China trade tensions, really brought into focus by these historically high U.S. tariffs, are sending major shockwaves globally.
Yeah, it's not just about two countries. It's affecting global growth, putting pressure on critical sectors like semiconductors, and creating this really mixed bag for countries like India. Opportunity, yes, but serious challenges too.
And I think what really comes through is just how interconnected everything is, isn't it?
Absolutely.
Yeah.
A tariff decision here, a mineral control there, it cascades.
Yeah.
The semiconductor vulnerability, India's balancing act. They're perfect examples of that deep linkage across the global economy.
And we really hope this deep dive has helped make sense of some of these complexities, giving you the key insights and context without getting totally lost in the weeds.
Yeah, that was the goal, to pull out what really matters.
And maybe it leaves you with a final thought to consider.
Which is?
Given all these shifts, the tariffs, the supply chain adjustments, the focus on critical minerals, how might these bigger global economic forces ultimately filter down and, reshape things in your own world? Your job prospects, maybe. The cost of things you buy. It goes way beyond the news headlines, doesn't it?
It really does. It connects to everyday life in ways we might not immediately realize.